Hi everyone, my name is Khalil, and today I'm going to walk you through psychology in trading. So, basically, how our minds and emotions influence the way we trade. We usually spend a lot of time looking at charts, indicators, and strategies, but very often it's not the strategy that makes or break a trader, it's what happens up here in our head. So, in this presentation, I want to show you how psychology can either support our trading or completely destroy it, and what we can do to manage it better. So, what is trading psychology? Let's start with what we actually mean by trading psychology. So, trading psychology is simply the mental and emotion side of trading. It's how we handle fear, greed, stress, confidence, and discipline. The more important. When we make decisions in the market, two traders can look at the same chart and use the same strategy, but one follows the plan calmly and the other panics, closes early or adds too much risk. The difference is not the chart, it's their mindset. So, trading psychology explains why we sometimes do the opposite of what we know we should do. So, let's talk about something else. Why does this matter so much, or why trading psychology matters? Markets are driven by people, and people are emotional. Even if we have a clear trading plan, when real money is on the line, emotions can suddenly become very loud. So, fear can push us close a good trade too early. Greed can make us ignore our stop loss. Frustration after a loss can make us jump into another trade just to get the money back. When psychology is weak, trader might have a strong strategy but ended up with a poor result. So when psychology is strong, even a simple strategy can perform much better because it's executed consistently. So psychology is really the link between our plan and what we actually do. So let's talk about emotions in trading. Trading is like an emotional roller coaster. When we win, we feel excitement and sometimes overconfidence. But when we lose, we feel disappointment, anger, or fear. Prices move quickly and we react. So, fear might stop us from entering a setup that perfectly matches our rules. Greed might convince us to hold a trade far beyond our target. Stress can make us stare at the screen for hours and hours and then make rush decision. The goal is not to remove emotions completely. We are humans, and emotions are like spices for life. So basically, the goal is to notice them. When we can say, okay, I'm feeling nervous right now, we are much more likely to pause and return to our plan instead of acting on impulse. So let's talk about something else: fear, greed, overconfidence, revenge in trade. On this slide, I want to focus on four of the biggest psychological traps: fear, greed, overconfidence, and revenge trade. First, fear and greed. Fear shows us hesitation, not taking 10 trades, getting out too early, and being scared to trade after a lose. Greed shows us when we suddenly start risking more, chasing every move and thinking only about how much we could win, not what we could lose. Then we have overconfidence and revenge trading. Overconfidence usually comes after winning a stake. We start to feel like we can do anything, we can't be wrong. So we ignore our rules, increase our position size, and take lower quality steps. This often ends with a painful loss. Revenge trading is the opposite situation. We lose money and immediately we want to win it back instead of accepting the loss. We jump into another trade without thinking clearly. Very often that makes us the hole deeper. If you can recognize these four patterns in ourselves, we already have the big advantage. So, something else. Let's talk about trading, psychology, and mental health. Trading doesn't just affect our account, it affects our mental health. Constantly watching prices, dealing with uncertainty, and seeing our P&L go up and down can be very stressful. If we link our self worth to our trading results, a losing day can suddenly feel like a personal failure. Healthy trader psychology means setting boundaries. So let's talk about biases in trading decisions. Psychology also tell us when we are not always rational as we think. We all have biases that influence our decision. For example, confirmation bias makes us search only for information that support our opinion. If we think the market will go up, we ignore any signs that might go down. Herd behavior. is when we follow the crowd just because everyone is buying. And that's my worst one. I don't like to do this one. And we have recency bias, makes us think that whatever happened recently will keep happening. After a few wins, we might believe we're in a hot stake and take more and more steps. After a few losses, we might believe we're doomed and stop following our plan. By learning about these biases, we can pause and ask ourselves, am I seeing the market clearly or am I just seeing what I want to see? Let's talk about something else, applying psychology in trading. So, how do we actually use psychology in, to improve our trading? One key idea is emotional regulation. That can be as simple as taking a short break after big win or lose, doing a few deep breaths before entering the trend, or stepping away when we feel very emotional. Another idea is disciplined decision making. We write down a trading plan, entry lose per trade, stop lose, take profit. When we set up appears, we check it against the plan itself. And finally, we work on our behavior change. A great tool is trading journal. After each session, we write what we did well, what we did bad, and how we felt. Over time, patterns appear. Maybe we always overtrade after 10 p.m., or maybe we break rules when we are tired. Once we see patterns, we can change it. To wrap everything up, psychology is a trading not for soft. Optional topic is one of the main reasons why traders either succeed or fail. And emotions like fear, greed, overconfidence will always be there. But we can learn how to recognize them and respond to them more clearly. By combining a solid mindset with a clear trading plan, good risk management, and regular reflection, we make fewer impulsive decisions and we can make it more rational ones. We won't win every trade, but we give ourselves a much better chance to be consistent over the long term. So, in the end, mastering trading is not only about understanding the market, it's also about understanding ourselves. And finally, thank you so much for your attention. If you have any questions to discuss specific psychology examples, I'll be happy to answer them. And as I said always, I'm so sorry for any English words misspelling. And thank you so much.